I think it is. I mean, again, my long-term thesis for Bitcoin is bullish. Yes, I do believe eventually we will see another leg down to 20,000. My very short term, as I mentioned, I bought some Bitcoin on that dip. So very short term, I think there could be a little bit more upside. But per the chart, I'm looking at an upside that could be capped around 42,000.
Gareth Soloway is a renowned technical analyst, trader, and the chief market strategist of InTheMoneyStocks.com. He has previously shared views that Bitcoin is in a bear market, and he expects the coin to crash to $20,000 or less before the end of the cycle. In a recent interview with Kitco News, Soloway talks about how the geopolitical tension between Russia and Ukraine may be great for an asset like Bitcoin. Soloway adds that he expects Bitcoin to rise to $47,000 and later $52,000 in the short term. These are the key support levels that Soloway sees Bitcoin attaining within the next few weeks or months, after which he sees prices plummeting to the 20,000 range. Welcome to Savvy Finance. This video examines Gareth Soloway's key levels to watch for Bitcoin. If you are worried about whether you should be hodling or selling off your Bitcoin in the coming months, be sure to watch the video to the end as the technical analyst gives some useful insight into what one might expect during the period. Also, ensure you click the like button and drop your comments below. Thanks for your continued support. It has been over a week since Russia's military launched a full-scale attack against Ukraine. The news of the war and an impending World War III sent the market into a frenzy. During the first hours after the attack, Bitcoin took a nosedive as investors panicked it would go to zero. While some people were panic selling, Gareth Soloway was making opposite moves. The technical analyst explains he put out a limit order to buy Bitcoin, Solana, and Polkadot. Soloway also explains that the Russia-Ukraine war might be positively impacting the Bitcoin market. Faced with increasing sanctions, Russian oligarchs and politicians are turning to crypto, especially Bitcoin, to safeguard their wealth against the collapse of the ruble. People fleeing from the war-torn regions in Ukraine might also find it easier to store their wealth in a digital wallet they can access from any corner of the world. Listen to Soloway's explanation here.
Here was your dip when the invasion started, right? And what I had done that night is I put out limit orders because it occurred. I figured it could occur while I was sleeping. I wouldn't be able to react. So I put out a limit order to buy Bitcoin, Polkadot, Solana, even some more Cardano. And sure enough, they got hit, which was beautiful. And I was anticipating the same thing. You anticipate an overreaction, the panic. We've seen panic before, how it crushes assets, risk assets initially. And then what you see is them bouncing back. So that's exactly what I did. You did the right thing. In fact, the next morning, I had GLD, which is gold, the gold ETF, and I actually unloaded it on the gap up at the highs because I also expected it to come back down. And again, these are extremes. So you always want to go counter kind of trend or counter thought process. And that's exactly what you did there. And that was 100% correct. So go counter trend and you'll usually be right. And in terms of Bitcoin, what we're seeing here is a beautiful pop today. My feeling on it is that you've now got more sanctions with SWIFT being introduced or taken away from some of the Russian banks. This is becoming a longer drawn out conflict, more sanctions on Russian oligarchs. And that's going to make people more intrigued about, okay, well, does Russian oligarchs, do they start buying Bitcoin? Do they diversify out of rubles and out of currencies where they can actually move those Bitcoin assets to different locations and access them still? And then you also have the plight of the Ukrainians where it's hard to get out of the country with suitcases full of money, but it's a lot easier to go somewhere else, access your Bitcoin as well. So I think you're seeing a little bit of that vibe of, okay, Bitcoin makes a lot of sense when there's geopolitical risk out there.
In his interview, Soloway also gives his short-term, mid-term, and long-term outlook for Bitcoin. Though the technical analyst is a Bitcoin bull, he explains that the coin is currently in a bigger bear market. However, Soloway wants us to expect some bullish price movements in the short term. He explains that there are 3 critical support levels to look out for: $42,000, $47,000, then $52,000. Soloway adds that he still expects a massive crypto bubble burst that would send Bitcoin to $20,000 or less. Here is Soloway explaining his outlook for the crypto.
I think it is. I mean, again, my long-term thesis for Bitcoin is bullish. Yes, I do believe eventually we will see another leg down to 20,000. My very short term, as I mentioned, I bought some Bitcoin on that dip. So very short term, I think there could be a little bit more upside. But per the chart, I'm looking at an upside that could be capped around 42,000. That's my first kind of resistance. We're getting very, very close. And then if we get through 42,000, you have this upsloping trend line. You can see how it hit it right here. If we come back to it, it's around 47,000. That would be your next resistance. If it somehow can push through 47, then you're talking about 52,000 as being your next likely target. Now, again, this is all short-term movement. We're inside of a bigger bear cycle, in my opinion. So eventually we will see the Fed tightening more. And I think, by the way, that's part of it, right? So, as horrendous as the invasion is and people getting hurt, there's a chance for the equity markets to say, okay, the Federal Reserve may not raise 50 basis points in March because of the geopolitical turmoil. Maybe they're only going to raise 4 or 5 times in 2022 versus, I think, what JP Morgan said a couple of weeks ago, which was 8 or 9 times in 2022. So you've seen this little bit of a situation where tech stocks have actually been doing a little bit better since the invasion. And I think it has a lot to do with the chance that the Fed is not as aggressive on tightening. Yeah, so I mean, 42 is going to be your first, small test. It's only a minor level of resistance here on the chart. So again, small test coming up at 42,000 may take a couple of days to try to push through it. But I do think that there is a decent chance that it's able to, and then may trade back up to that 47, this upsloping orange trend line here. I think what investors will have to understand is that everything we do here in technical analysis land is based on probabilities, right? So when you see a sharp move down like this, there's inevitably a period where you go sideways and chop for long periods of time. So you can see how you're starting to kind of do this pattern. And ultimately what you're forming is a bigger bearish pattern on the daily chart. It's called a bear flag or an in spirit of bear flag. And so the odds favor that at some point it breaks down. Now, it gives you a lot of opportunity to trade the range, which is what I've been doing. But inevitably, the midterm, I still think sub 20 or 20,000 is likely. And then once we get down there, once you see this kind of final flush out.com-ish type reckoning period, then I'll be starting to hodl myself and starting to accumulate more Bitcoin for the longer term.
Finally, Soloway talks about the possibility of the range breaking. He explains that if this happens, it could mean a very aggressive and progressive tumble down for Bitcoin. If it does happen, the technical analyst will exit his longs. Here is his advice for all investors if such a thing occurs.
Yeah, and that's a great question, right? So this can be used for people that have longs like me. If it breaks this next level, I'll show you guys, then I would exit the longs that I have right now and say, okay, game up, game over. And basically it's this trend line, right? So you have a very defined line that you can watch. And the beauty of it is it's actually rising. So your stop is getting tighter and tighter as Bitcoin goes up, almost like a trailing stop in this situation. So if you were to get below this line on a daily closing basis, I would be very concerned that this range is now broken and price will then start trading down pretty aggressively.
Since surviving the turbulence of the pandemic, Bitcoin has remained well above $20,000. In addition, many indicators, including the Relative Strength Index, logarithmic regression, stock to flow, and the 200-week moving average remain bullish. We are not ruling out the chances of a crypto bubble burst, nor ignoring the crypto's long-standing history of high volatility. Still, the chances of Bitcoin going below the 200-week moving average, which as of February 28 was over $20,000, are quite low. However, all these prove what analysts like Willy Woo, Plan B, and Michael Saylor have been saying all year. Don't be overexposed, relax, and chill for wider network adoption. Thanks for watching the video. Remember to drop your comments below and give this video a thumbs up. Till our next video, stay safe and savvy.